Hey guys, you've tuned into Money Control. I'm Manisha Gupta, and we're looking at the crude oil prices where there is only one way trajectory that we have been seeing in case of prices for some days today. Well, 6 weeks of constant gains. We're trading at a 3 month highs, and it has been good going for the crude oil prices. Not such a great idea for the people who are watching inflation of various kinds. And if you look at the crude prices itself, we're trading at $120 per barrel for the Brent prices, and NYMEX not too far away from that level as well. So I want to start counting the reasons why the crude prices are here and also tell you on where we are headed from here on. To start with, it has been about Saudi Aramco, which has increased its premium on prices for crude, which is due in the month of July to Asia and Europe customers. So Saudi Arabia has increased prices by $2.5 as compared to last month. So the kind of premium that is on benchmark right now is by $6.5 per barrel, which is on the higher side, which tells you that even as the prices are higher, because there are supplies which are tight, the demand is stronger, customers will pay these higher prices also. The second thing is about the OPEC and allies itself, which have increased production. Until now, it has been 432,000 barrels per day. Now they have increased it by 648,000 barrels per day for the month of July and August. But the markets are quite skeptical because when you look at within OPEC members, most of the members have maxed out their capacities. So who can increase production? Saudi Arabia, Russia, and UAE. With Russia, we've already seen production down by 1 million barrels per day since they invaded Ukraine. So that country is totally out. Saudi Arabia, yes, can increase production, and then you have UAE, but how much will they be able to produce is something that the markets will wait for in sense of numbers. The third thing is that China opening up yet again after their COVID lockdown, so that demand will be coming back. Fourth point is the US summer driving demand season. We did see strong numbers in the previous week, and at these current levels, also, if the demand is strong, then you're looking at better numbers going forward. And then you have the US non farm payroll data. The numbers for that also came in well. So the US jobs are increasing too, and that's a positive sentiment. Markets also are looking at the kind of inventories that we have. The US has seen last 4 weeks of constant decline in inventories. That is a supportive factor as well. And then it's not just the crude prices. Take a look at the US gasoline prices at all-time highs. We've seen 20% of gains in gas prices in US in the previous month. That one also has seen 6 months of constant gains. So as I said, whether it's about tight supplies, falling inventories, producers not being able to keep up with their production, and the demand, which continues to be very strong, are all the factors which are keeping the crude prices on the higher side. Clearly, it is going to be about on what Russia does. The kind of sanctions that we've seen on that country will have a longer impact in results or impact as well. So going forward, markets believe that we're already at $120 per barrel. This year has seen a range of 139 on the higher side and 78 on the lower side. We are trading on the higher side of the range right now, with the expectation that in this current quarter, we could be looking at 125 on the higher side too. Remember, in next 1 month or by the month of August or so, you will also see the US hurricane season hitting in. That is usually a very bullish time for the crude oil prices. And this time around as well, 5 major hurricanes is what that area is expecting. So yes, as I said, everywhere that you look, there is bullish sentiment. So the chances that you will see $125 per barrel before you see 115 on the lower side are on the higher side.